I mean, if the market was up up for the last 6 days, and SGX is up 60 points, I wouldn't look at it very favorably. Why? Because 6 days you've already gone up. But if we had gone down 6 days, then I would buy the 60-point gap up. Similarly, for selling, the market's gone up 6 days. A gap down will have more implication. So make sure that you have to have a bit of context. You cannot apply everything without any context. Okay, it's 10:35. We are starting out again. So let's now look at examples and many examples of everything. And that will clarify several issues. Now see this. These are narrow pivots. Why are they narrow? These are narrow because the previous day is range bound. So next day early morning we have a gap up. Now you can see the first bar is not crossing R1. So you wait, and then you wait for this bar, 4 or 5 bars, and then you see the market pushing above R1. That is the point to act. You cannot assume that this will cross. So if you have to act, maybe do 50% and add the other 50% here. But I would prefer to see this play out before I act. Okay. But this is broadly how expansion happens. Narrow pivots, previous day range bound. I would like the market to be coming down before I take this call on the upside, or at least being range bound. If we are rising for last 8 days, then I'm not interested. End of story. On the upside. See this. Before this point, the market had rallied quite sharply. So actually, these 2 days were narrow range days sitting on top of a large rally, 6 to 8 days rally. So if you see them as bars, this was the situation. Now if you have 6-7 days worth of rallies, what is the most obvious that can happen here? So here we did not open below S1. We opened inside S1, went up, and I was waiting because I knew that if it fails the low of these 2 bars, you are going to have a major collapse because everybody is long from here. So the moment this green started to clean out, we started going short. And as you can see, within like 9:45, we were up 8 to 10 lakh. This is like, I think, almost 300 points. So have this kind of context before you apply any sort of method. And the reason I say that is, if you are just looking for narrow range, how many narrow ranges can you find in a sideways market? Many. So if the context of the market is sideways, the narrow range breakdown will not have this sort of effect, which means narrow range inside the range. So you will have to wait for a breakout of this sideways market where these are different days for it to show you action. And this is where experience comes in. You will know with experience which of these you need to take. See again, this was narrow range, opens up, comes off. This was, I think this had some sort of news, some, recap, shecap or whatever. This is not the day to go short if previous many days the market was range bound. You wait, maybe buy some here. As this high is getting taken out, add, and finally take it off. Okay. So sometimes waiting is important. Why? Because you can have this kind of a day and it suddenly collapses back. But when you wait, you are making sure that the bears are not able to take this lower. Do not go all in here, because things can start to fail. Even the best news can sometimes fail. Again, this was some kind of news, huge gap. When you get these huge gaps, wait. Why? Because sometimes the retracement come down till here and then go up. So if you get long here and this is 200 points lower, you'll get into trouble. So wait till the high of the day is taken out. And that is a bit of money management, which means if you are short and the high of the day starts to get taken out, you need to reassess. If you are long and low of the day starts to get taken out, you need to reassess. Playing news, expected and unexpected. In our country, most of the time you have unexpected news. So that is where the turnaround trade comes in. Now here we opened above R1 and I took long positions. And somewhere here I was trading and suddenly it starts to go sideways on me, and till then I didn't have any idea that surgical strike will happen or whatever, but all of a sudden this starts to decline. Now the moment the low of the day is taken out, this is where this big bar, we cut long positions and go short. So at this point, hardly, I think we lost about 100 points. But by the time this was over, we were up 300. That is how losers become winners. Okay. Now, how do you book profits? This was a very short retracement and again market fell. Now this green bar here, this was a very tall bar. So obviously there was support that was coming in. So I waited. Once I got this red bar, I started to cover. So A, look on the left. If you have nothing there, then wait for the price action to tell you that there is covering. This is a covering bar. So the next time it went lower, I covered again. Okay. So this is how you stop and reverse. If you are getting this kind of a large bar, then obviously something is wrong. Now this is that democracy in danger. Here we were long and here we had taken profits here. Now the market was hanging around, not giving you clear direction. Suddenly those judges press conference starts and it starts to collapse. We did not do anything while it fell. I was always looking towards the left. This was about the point where it should have stopped. This is previous day low. And as you can see, this is the warning bar where a pin bar got formed. Again market came off, held on. So this is where we started to build position. It hit pivot, corrected a bit and then started to go up again. So this is where your short covering really picked up and basically the judges news day became a profitable day. See, 99% unless we are going for a head-on war with Pakistan or some collapse has happened because of something which is like a 1% situation, Armageddon. Most news that comes in has a 300 to 400 point potential on Bank Nifty because most of the time the fall is caused by media hysteria. So the more hysterical the anchors get, the more bullish I become. Okay. So the idea here is that when you have these sort of plunges, look for opportunity to buy. So look at this. This was a downside trending day, right? This is pivot. So next day pivots were lower. So the expectation was that you hit the pivot and you go lower. Now here what is the mistake I made? I did not wait for follow through of the first red bar and I went short thinking that a downtrend was in play, but even that first bar didn't show follow through. So I was short. The moment we started to clean out this first bar, I cut and I reversed. I lost I think 50-70 points, and when I reversed, this was a 200-point trade. So that is how a losing trade can be turned into a winner, because you have to know what is your uncle point. If the high of the day starts to get crossed, then chances are something on the other side starts to work out. So where is my stop for the short trade? It was here. For the long trade, it's here. This is demonetization, November 9th. When demonetization was announced, for one day market was very bullish. Second day, they kind of realized that, it's probably not positive. Now look at this. below 200, big bar. We went long 50% of the way. Now look at the thought process. Obviously demonetization happened, SGX was down 100, 150 something. Do not act immediately, wait for market reaction to news. Although we are supposed to give calls and we gave the calls, etc., but we were waiting to hear from the market. This was first started as a red bar, started turning around, became a green bar. 50% of the way we were long because the market was not showing follow through on the downside and the equilibrium is far away. So this became a nice trade. Why? Because we are almost hitting 200. So that is where we took profits. Then the market started coming off. If this is the complete bar, it hit 50% and found support. This is where your 50% concept is useful. So again, we started to buy here. Once this 20 started to hold, we added because this was clear that it's going up. And then we started to update stop and take profits here. So the first instance, first 15-minute trades generally happen when there is sharp buying or selling which gets initiative guys involved. This is Brexit. The market had been going up for many days and it closed at the highs of the day before Brexit. Why? Because markets thought that Brexit was a non-event and the UK will vote against Brexit. But what happens when everybody thinks that something is going to happen, it does not happen and the market starts to collapse. Okay, so this is again 50% weak rally. So don't enter on this bar, wait for some rally to occur and tell you who is in control. So you went short here, by this time you made some money. Now by this time FTSE futures are down, I think 120 or something. So I was waiting for FTSE to open because the problem is with FTSE. Now what I start to see here, FTSE opens 120 points lower, goes to I think 160 or something. But we failed to make new lows. That I found very interesting. And the moment we started to cross this zone, it was clear that market is doing something else. Buy, 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 and by the end of the day, we had recovered more than what we had lost. So that's how you play news. You need to see the reaction of the market. Do not go by the wisdom of anchors, by the wisdom of Arnab Goswami, by the wisdom of newspapers. Market wisdom is what is needed. This is Gujarat election. Most of you would recall 9:30 there was a tweet from me to buy. In fact, I didn't have any television or computer that day. But if you are getting this kind of a long shadow, this is 24,000 and this is 25,000, 1,000 point bar. Again went down, again restarted. So even if you bought here, this is 25,200, this is 25,800. So the market told you that it believed BJP had won. But this bar told you do not go short. And this is again something that happens when you are ignoring the market move. Where do you have your stop? If this two green bars get taken out, that's your stop. But once the high of the day is out, then obviously all these guys who are short here, they get trapped. This is the day Donald Trump won. And if you people recall, everybody was saying, oh, what a tragedy has happened, this will happen, that will happen. First bar, I had given a short call at 9:17. I changed that call. Why? Because the market started to show me green. Enter here. I think by 9:40 you had made lot of money. Again came down 50% zone, held on and started to go up. Can you see this? This is how 20 is held. This is excessive. This is 800 point gap. So while we bought here, we didn't buy here. We didn't buy here. We waited for some cool off. Bought here, used a stop, took the trade because Moody's upgrade was all leaked out. It was getting priced in here. So you have to be intelligent enough to know what is priced in. If the market has been going up before a good news is announced, chances are they are priced in. Here it made no progress. And by end of the day, it started coming off. If a market refuses to make new highs, then what is going on? All these long guys are trapped, and the moment this low got taken out, the longs had to cut their position. So try to see who is trapped, the long or the shorts. Again, as you can see, suddenly middle of the day, something happened. Now again, these pivots are higher than these pivots, right? So this is a very slow kind of pullback. So I went long here. It went up a little bit, then it started to come off. Suddenly we started getting this. The moment I see this, by here I was, cut my long short. So here I was down 100 points. By the time this ended, we were up again, I think 300 points. So again you can see first green bar, you do nothing. Then it again goes for a retest. This is where you cover. If there is nothing on the left. So these are the situations where you cut and reverse. Stop. This is your stop. This is Raghuram Rajan the day he resigned. Market negative, SGX down. but the first bar told you something else. I have shown you several examples of mean reversion. This is how mean reversion happens. We crash into the pivots, they try to stop the price, but next time the pivot is crossed. See, the 200 is crossing through the pivots. So the market goes into a resistance, stops, makes a higher low, next time goes through it. So this is, price action reading that you need to know. These are all 5-minute charts, but the time frame doesn't matter. Next, let's talk about exit. In all presentations, people talk about entries, but I think exit is what determines the size of profit. Now here, excuse me, market opening, the pivot zone is rejected. Rejected means that the market does not want to take this out. So go short here, and by the end of half an hour, you are able to take some profits out. This is one low, this is S1. So the first move generally tends to end at around S1. So you take half your money off. Then the market tries to rally, comes back, tries to rally, comes back. So it is clear that it's not a weak market, it's probably turning sideways. So again, when you get here, this is a good time to take it off, because as you can see, the shorts got trapped. So if you are able to see couple of intraday points, try to use them as a reference. Again, big red bar, this is a 200-300 point red bar, so somewhere in the middle of that you should be short. Now see, you are getting 4 or 5 vertical bars. This generally happens on Bank Nifty. So again, take it off. Again the market is sideways, not really dropping. When we go back to retest this level and break it, you want to be out. Why? Because a trending day often keeps making new lows. If a market is not making new lows every hour, then it's not trending, then it's a bit of sideways. Now here you have some kind of reference. Previous day low is visible. Again early morning pivot gets rejected. So if we were in any sort of trend or sideways, this zone is rejected. So you went short here, you kept on sitting. Again, not really trending, kind of drifting lower. So I want to take my money off, because you are already sitting at 1430, which is about 230, 245. So you don't want to wait till the close. So once you get this previous day low, you can easily get out. See, every day will not be a great trending day. So better to take profits if the day is not looking like a massive sell-off or a massive rally. Make some money and take it home. Most days will be average days. Only some days will become a monster day. Like yesterday, I explained to you that the AMA can be used as a trailing stop method. So here the pivots on the current day were lower than previous day. But what happens in the morning? Immediately it's rejected and goes up. Somewhere here you accumulate and you get your 2-3 up bars. Either you can use 8 period or you can use anything above this. Obviously this looks like a sideways zone. So if you are taking previous day high out, you don't want to stretch because follow through may be missing. In a sideways market, we are generally looking to play R1, S1 or high low of previous day. Now here you had a red bar, current pivot lower than yesterday pivot, but what happens? No follow through. This is the reason, unless there is a special situation, I don't want to act on the first bar. You break above high and that's when you know that today it's a mean reversion day. So you get long here somewhere. Now what is the problem? One green bar and then a massive green bar which goes and slams into the 200. So market comes back, again tries to go up, again goes up. Now understand this, if you are long and the market starts to go sideways on you, and as time goes by, it becomes bearish. A bullish market should have broken out, should have gone up. But this going of sideways should hint to you that you are better off taking profits because this is a resistance which is stopping the market. And as you can see, it collapses back. So the idea is if you are getting these big bars, take it off. Why? Because this cannot continue forever. This is the maturity phase of any sort of trend. So wherever you are having positions, this could be a daily chart. Okay, if you get 3-4 big days, it's time to take it off. Understand this, the easiest time frame is the smallest time frame. As time frame grows, more and more uncertainty comes in. Another quiz. Positional will come under swing trading. I don't want to confuse the two. These are concepts. All charts on all time frames look the same. If you know what to do, then intraday and positional will be the same. If you don't know, positional will not save you. Because to repeat everything for 5 minutes and to repeat everything for again daily will make it a 4-day seminar. This is the first sign I look for. If I am long and green bars get cleaned out by big red bars, not small, big red bars, there's a problem. If I am short and red bars start to get cleaned out by big green bars. See, there is no fun or nothing brave about your stops getting hit all the time. And this is what you are going to learn from experience is that if a trade is not working out, get out as soon as you realize. Most of the time, I don't need my stop to get hit, to get off or to take the other side. Because if a red bar is getting cleaned out by green, a lot of time it's a buy signal for me. If a green bar is getting out by red, that is also a sell signal for me. That is how a lot of times losing trades recover. See MT4 code, you can Google and you will find out. See here, as you can see, this green bar is cleaning out these series of red bars. So by now it is clear that the market is heading up. Basically this data is getting cleaned out. So this is a kind of range breakout. Now look at the size of this bar. This is a 200-point bar. So if you are getting a sharp move in your favor, and now you have, look at the resistance, pivot resistance, 200 resistance, all sorts of resistance. So you are getting a big favorable move in your direction. Similarly here, Red cleans out this, then again goes up, again cleans out. So if you went short here, look at the size of this move, 25,200 and this is 24,950. If you are getting this kind of a windfall, anything which is 3 to 5 bars, 3 to 5 big bars, you should take it. Statistically, the bulls and the bears cannot continue an upside for more than 3 to 5 bars on average. But if they continue like 7, 8, 9 bars, then there is going to be a collapse very soon. Collapse from the upside or collapse from the downside. Now see the context. The previous day was a sharp down day. So what is your setup? That you are looking for a possibility of this also. If there is no follow through, this can happen. Where are the biggest trades when there is no follow through? Precondition was there. I think we can run along and finish the next section and then have Q&A so that we are up ahead with the time on the course, because these are all examples. We can run through them fairly quickly. Now, how do pivots and moving averages match? The 200 period average on the 5-minute is the daily pivot. Daily pivot is that pivot which is used for intraday trading. 200 period average on 15-minute, and you can compare with your charts and your spreadsheet. This will be true within a few points. So this is used for swing trading. If you are a bigger time frame player, just use a different time frame. Swing trading is a 3 to 5 day type trading. Use 15-minute chart. Positional trading, 60-minute chart. Same theories, everything same applies on all of these time frames. Choose your time frame and use the same tactics. We will talk a bit about positional and swing also, but basically it's the same thing. Now, as you can see here, the 200 is going through the pivots. So both these theories are the same because both are trend following. Now see here, this gaps up, goes flat, dips, and near to the pivot is the entry point. Why? Because the rally started from previous day. Now here you open between S1 and the pivot. So as R1 was crossed, you start to see bit of a trend. So if I have to trade a trending move, I am looking for a decline to the pivot zone to be able to buy. Why has he made this into a zone? Because if you have a single point, the market can come till here and turn around. Just to make it into a zone, and the zone works because if you use the zone, we have tested it 65 to 70% of the time on a daily basis, pivots are touched. This is 200 period average on 50-minute chart, weekly pivot. So if you want to enter long, you have to wait for 3 days till Wednesday till the 15-minute on 200 is touched by the price, and then you get in and then you ride this rally. Exact same thing, 200 moving average theory is the same, pivot theory is the same. This is 60-minute chart of monthly pivot. See how exactly it hits R1 and starts to turn. Again, in a range, breaks out and starts to move up. Again at lower levels, S1 is hit. The same thing applies. At the beginning of the month, you know support, resistance, you know where the pivots are, so everything is known to you. Now this is where we do a bit longer term time frame. So longer term people should pay attention. Precondition, narrow pivots, trending situations, and trading boundaries or in sideways market, exactly the same as intraday. These are 60-minute pivots. Why? Because as you can see, in July you have different pivots than you had in June. But once they are formed, they are the same. What is our theory? Crossing of R1. Previous month, narrow range month. Hence, these pivots are narrow. Same thing. Once you get in, use your trade management. Update stops, adding, all that. No change at all. Again, previous month was narrow, so you have these pivots which are coinciding, right? Buy this bar because this is crossing R1. It corrects back to R1. So stop here, update stop, add and see it go. Same thing, no change. This is again 60-minute pivots on a daily chart. Again 60-minute pivots on a daily chart. I am just showing you how you can trade large trends using 60-minute pivots on daily chart. So every month you have a new set of pivots. Best is there is an inbuilt trade management system. Why? Stop at S1, update, because you are positional, you'll have to have a bit wide stops, S1. So once you are in a trend, the positional trade will keep you in a trade. I would encourage all of you to pick up a trending stock like Bajaj Finance and see how it works on Bajaj Finance. See, the more stocks you study, the more charts you study, the more experience you will have, because there are no right or wrong answers here. So you need to see when things work, when they don't work. Trending pivots on a monthly basis, and you can ride the upside. Similar story. See what happened here. Made one low, rallied, made another low which wasn't substantially lower. Hence we know that an upside is ready to start. Same thing, keep updating stops, keep adding each time. You can even add when we come down to the pivot. So use it just like your moving average system. Once we start to break S1, that is the end of the trade. Similar thing. Now you tell me, sir, what if the item is not trending? Then this is a trend following system, then it doesn't work. Find a trending item first. This is a recent example, which is 2018. See, this is the big bar. So trade 1 was here. Stop below S1. You buy this. This is your Gujarat election. And for the rest of the month, you went up. Next month open, you started to come off. This is July 2018. It hit pivots and again started to rally. Exactly the same. This is 60-minute pivots, which is the monthly time frame. This is trading sideways on the monthly time frame. Fading boundaries, exactly the same. Sideways, fading boundaries. See, the same level of diligence, the same level of everything, but the game is just slower. Okay, so make sure that you have the patience for this kind of trading. If you keep getting bumped off, like if you see these 3 down days and go short without understanding this is a sideways phase, there is trouble. Now, when should you not trade pivots? See, this is neither sideways nor is it trending. Here it seemed it was sideways. Suddenly it breaks out, makes this high, again it fails. So if the instrument is not clear, don't trade it. Find something else. In the market, there is no room for forcibly trading something. So the item should be proper to use this kind of methodology. Otherwise, change the item. Again, you can see here it's sideways, suddenly it breaks out, then again becomes sideways. Not a good way to trade. So again, kind of, bad trend as they call it. So sometimes trades come back to break even, sometimes they go even beyond break even. So it is not a compulsion that you have to square off your trade at break even. When the price is not going through cuts, that means there is a trend. If prices are going through pivots, then that means it's a sideways market. It's like the moving average. Now we are getting on to swing trading with moving averages. See, on the Nifty, in the current scenario, it's a bit more difficult to trade because it is neither sideways nor it is trending. But Bank Nifty, I think, is more clear. You have a lower boundary and a upper boundary. But absolutely, if things are not clear, there are no extra points for forcibly, trying to put a system on them. There are easy trades and there are difficult trades. It's like there is a 300 run pitch, there is a 225 run pitch. That's how you need to play. Now let's start with swing trading. All of you must be aware of the four phases of the market. First phase is accumulation. This is where large institutions, money management, pension funds, they accumulate an instrument. Once their accumulation is done, the price breaks out. And this is where retail gets in and it tries to take the prices higher till it reaches an unsustainable price and the large institutions look to sell or distribute the stock, and this is where retail is overexcited. Once they are done distributing, the price comes down as retail investors cannot take losses and start to cut positions. This is United Spirits. This was accumulation phase. So all of you guys who want to do swing trading, look for stocks in the markup phase. If you try to do swing trading here, you will get all chopped up because the 20 period average will stop the price from going down only when it's in a markup phase. So this was the day when some McDowell results were announced, and see the kind of run it had. Often this breakout from the lows will happen with some news. This is Soba developer. Again, you want to swing trade. This is the phase to do it, not this one. This is accumulation. This is markup. Tata Global. Anyone remember at 160, 170 I said 320 will come. So each time it consolidated and you bought, it went up. This is what I saw. This was a multi-year consolidation. So is this theory any different from the intraday range bound breakout or breakdown? It's the same. This is, I think, weekly chart. So weekly chart trades the same way as a 5-minute chart. This Sonata software. Once it came out, all you had to do was buy on any consolidation and higher prices came. So chart selection for swing trading is very important. People just take any chart and try to do swing trading. That will not work. How do you identify? This is the way to identify. Can't you say this is a range bound thing and post a decline? The chart behind this, the prices decline. So obviously this is accumulation when new lows are not being formed. This is weekly. But the same principle applies everywhere. This is JSPL. When your highs and lows are the same, things are getting accumulated. Now you have a markup phase because the 20 period average starts to incline. Same theory. Swing trading, individual stocks. Method 1. Look for strong trending stocks which are in phase 2 or phase 4. The opposite applies on the downside after the distribution phase when you have the mark down phase. Method 2. Look for a parabolic move. This method I had explained yesterday with Avanti feed. This is applicable both on downside as well as upside. Method 3. Look for averages to hold on the other side. Now, if the weekly average, weekly 20-day average, the price moves above it and starts to hold, that would indicate a change of trend. So this is all for the swing people. Again, same preconditions. Now let's see how do you define a strong trend. Both 20 and 50 should be moving in parallel like a railway track. Let's do some examples. Both 20 and 50 and 20 and 40 are the same thing, so no problem with that. This is Britannia. First condition you must look for in swing trading are the 20 and 50-day moving averages in parallel. Each time the price comes between this and turns around, buy. There is your stop below the 50. Comes down, buy. And that way, this can also be a money management technique. You start with your stop, again stop here, stop updated, and finally, by the time you get out, you would have taken your trade right up till the end. The day your last stop is taken out, that's the end of it. This is HDFC Bank. This one also gives you many opportunities. There are some stocks which have not broken their railway lines for last 4 or 5 years. Markup phase. So all you have to do is look for declines to buy. Now this is Century Plyboards coming down below 20, reaches 200 and 20 starts to hold. Have you noticed one thing? Novices buy after a big uptrend. Everywhere I am asking you to buy after large downtrends. So in a sense, this is your accumulation zone and this is your markup. Choose a stock which falls into these parameters. This is CESC. Accumulation. Finally, towards the end, 20 starts to hold. It did not hold here. Again, you start getting this move. This by itself, the 20-day moving average halt on all time frames. This beats any strategy hollow. Why? Because the precondition is such that you already have shorts in the system or longs as the case may be. It can happen below 200 also. In a bear market, stocks trade below 200 for a long time. The whole point of accumulation is that stock prices stop making new lows, and in a daily, weekly type of time frame, maybe for the next 2-3 months, they don't make new lows. When all the sellers are done. This is Hexaware technology. As you can see here, it stopped making new lows. So the swing trader, this is his best buy. Often swing traders are getting in here. because this is where the technical analyst calls come in. So always know where your stop is. Your stop is here. If you buy here, your stop is probably here. What most calls are basically are momentum calls. If the momentum continues, you get further 2 bars, you bigger fool theory. This is not trading.